All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen. We're just a few minutes away from the NFP release. So yeah, we're gonna have a look at it live as it comes out, and then we'll, of course, we'll check out what's happening with the market and what kind of a reaction we're getting. So before we go any further, as always, let's quickly have a read through our risk disclaimer. So as the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Also, just a quick mentioning of our Markets.com website. Yep, you can check us out for more info about us. Yep. Look, I'm kind of in a little bit in a rush, basically, because the numbers will be coming out very quickly right now. So yes, as you can see, only like not a full 3 minutes to go. So what we're expecting right now is the 59K against the 130. But what I said this morning in the webinar, in my Markets Talk webinar, I hope you watched it. But basically, I'm thinking that the number might come out somewhere like in between the 59K and the 130. However, what's going to be very interesting is to see what's going to happen with the 130K. Will it get revised much lower? Sorry, I need to clean my glasses a little bit. So will it get revised more to the downside? So basically, in general, if we get something like, oh, still dirty. If we get something like, let's say, below 59K, and then also the 130K gets revised well to the downside, well, I mean, what can I say? I mean, the market is already experiencing some, not experiencing much love, but yeah, we will see probably the futures going lower and some other, and DXY most likely maybe moving a little bit higher. We'll see again. That's because at the moment I think the DXY is just not really reacting to the news in general. It's more reacting to what's happening on the geopolitical arena. And well, in there, the US dollar is currently gaining. Look. Like I said, let's have a look. I have US oil here. This is actually one of my other videos that I'm going to do, the top news video about oil. But let's quickly do this. Let's quickly open up a few charts here. Let's see. Let's put DXY here, the dollar index. This is a 1 minute chart right now because I want to see what kind of a reaction we're going to get. On oil, yep, we'll see what's happening on oil. I'll put a 15-minute chart here to see just what kind of a reaction we're getting here. The futures are yes, so the markets are not open yet, the indices. So what I'm going to put here, I'll probably put Euro USD just to see what's happening here. It's a daily chart. And on this one, well, basically what we can have here is a gold to see what's going to happen with gold. Also, let's put a 15-minute chart, everywhere 15 minutes. So we have 30 seconds left. So let's see what kind of a reaction we're going to get here. Actually, you know what? I'll put the DXY also 15 minutes. So let's see what's going to happen. Again, waiting for the numbers. They're going to be coming out very soon. I'm going to open up my. Indices. I'm going to put on somewhere else. I'm going to see what's happening with the S&P 500 also on the 15-minute chart. So again, 5 seconds left. So let's see what kind of a non-farm payroll number we're going to get. And also unemployment, I'm hoping to see a little bit of a higher number. Let's see if that's going to be the case. 4.3, more than 4.3. Minus 92K, ladies and gentlemen. And the revision has happened to 126, from 130 to 126. There we go, ladies and gentlemen. This is just a bloodbath, I think. Let me just have a look what's happening. There we go, DXY to the downside. Not loving this anything. not loving anything here. So anyway, so yeah, I think I made it wrong initially by saying that if the numbers are on the negative side, DXY might go higher. No, the opposite. It goes lower again, because this kind of puts, if the numbers are that bad, it kind of indicates that the Federal Reserve needs to kind of go for those rate cuts. However, the market is worried right now about inflation because we're seeing oil spiking like crazy, and this basically might lead, not now, of course, it will take like a couple of months, to kind of to take all that in and to see what kind of effects we got because of the oil problems, or the oil trade problems. And for now, like I said, for now I am watching this very carefully. And honestly, DXY right now, yes, it went to the downside. It had this initial it didn't really initially feel the love, so yes, we saw this one selling off. However, I think that this is just a little hiccup, and honestly, DXY will continue pushing higher because just purely on geopolitics. So I think DXY will, like I said, continue as long as the war is happening. Yep, there is going to be demand for U.S. dollars. You still need to purchase military equipment from the U.S., and you're going to purchase that in dollars. Well, that's just kind of one simplistic way of looking at it. Okay, look, let's have a look with Euro USD. Yep, initially we had a nice nice move to the upside, but now I think DXY is picking up again. A little bit of a correction in oil, however, I think is just, like I said, it's just a little hiccup. And look, all these instruments, yes, they gold, you can see here, popped higher, not like a little bit of a safe haven moment kicked in. However, as I said this morning in my Markets.com webinar, that I really don't see gold right now going to the upside. And just purely even from the technical perspective, this little formation here, it looks like more like a bearish flag, to be honest. So yeah, it's and it's just continuing to, on the daily chart, it continues to float just fractionally above the 20-day SMA within my Bollinger Bands here. So in a way, it's like, it seems like it's like a matter of time until it's going to break it. So long story short, ladies and gentlemen, so for now, yes, I think that the initial reaction to the numbers here, to the minus 92K and 120, I mean, again, against the previous 59 and 126. Yeah, that was like, this, like I said, this is logical. The initial reaction is logical in my opinion. Unemployment, there we go. I said this morning that I'm going to go for a little bit of a higher number, and this is what I was saying right now as well. And there we go. Look, in general, the labor market is bad in the U.S. And look at this. This is the third time. No, actually, the second time, is it? Yeah, the third time that we are dropping below zero this year. So, sorry, not this year. Apologies. Not this year. This year is the first time. Last year we had two drops below the zero mark, and honestly, it's not really looking good. And when last month the 130 number came out, it's really difficult to trust that number, to be honest. And I said several times already in my previous webinars that at the moment the Bureau of Labor and Statistics, well, it does need to do a lot of damage, fixing, because after the shutdown that we saw at the end of last year, it still needs to kind of gain that credibility, because I think that ADP right now is the more accurate number, in terms of measuring what's happening in the labor market. Again, personal opinion only, but certainly yes. NFP did come out as a surprise. Now, what's going to be very interesting to see is what's going to happen next month. How much will this minus 92K will get adjusted. So this is going to be, like I said, this is going to be very, very interesting to observe that. So hopefully, like I said, ladies and gentlemen, hopefully you're on the right side of the trade. And in general, I keep on saying, like, wait for the numbers to come out and then do something about it, because beforehand, it's like putting it on on the red or black. So yeah. Okay, ladies and gentlemen, look. Okay, I just wanted to cover the NFPs very quickly. So hopefully, like I said, you hopefully found this useful. Again, the number, like I said, it came out at minus 92K, which is a huge bummer for the U.S. economy, and we'll see how the market how the market will react today when it opens up, because it's going to open up in less than an hour, and we're going to see what kind of a reaction we're going to get there. But initially, the futures I saw here, the S&P, the Dow, the Nasdaq, all really took a dive, took a plunge. So we'll see if the market regroups. In general, there is a little bit of negativity floating, and honestly, looking at oil is just to the moon right now. Honestly, to the moon. But I'll pick up on oil in the next video. So, ladies and gentlemen, thank you very much for watching and listening. This was like just a quick little short video update, and I'll see you next time in my next little video update. Bye for now.